Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Henry Weingarten. Henry is the managing director at the Astrologers Fund. Welcome back to Wall Street Silver, sir.
My pleasure to be here.
Yeah, it's such a huge pleasure having you back. We had you on for part one. Now this is part two, and I wanted to get you on because you were sharing these incredible charts with me. I'm going to pop them up on screen right now. We left off on our part one at this slide six talking about the silver and gold, but now let's get into the slide
Yeah.
number seven. I'll let you take it away.
Sure. Well, the main thing is, first of all, we're going to start about why should anybody be interested in gold and silver? And there's six primary reasons. We'll start with gold. Gold is very cheap geopolitical crisis insurance, and we know what the world is like at the moment. So it's certainly a good thing to have.
Right.
Now, number two is very critical globally and becoming more critical as time goes on. There are investors who cannot or will not buy the US dollar. The BRICS are examples of that. And there are other people who have the US dollar and they want to safely and cheaply hedge it. And for
Right.
this, nothing is as good as gold. So if you're in a country where you can't get US dollars or you don't want US dollars, gold is very good and the best there is. And again, it's a risk mitigation hedge. Okay, we can leave that in. We sometimes slur. Okay, now going forward, there's a couple of things that
Right.
may propel it. One is and they're talking about some nice gold cryptos. And once it becomes a good stable coin, the World Gold Council is working on this, then we're going to see higher numbers. Also, currently, there's record demand from the central banks. It's not off the charts. It's not a panic, but believe me, they are buying it. And again, if you're in a country that, let's say, has politics that is not aligned with the United States, you don't want to have happen what happened to Russia.
Right.
So they're adding to their gold as well as other currencies. And finally, we know this month the BRICS are meeting. I don't think they're going to have a substitute currency, but if and when they do, it's off to the races, and we certainly would see gold of closer to $4,000. At the moment, we're just expecting them to have more country-to-country exchanges without the US dollar. So going, say, from 57% to maybe 52% over
Right.
the next year or two. Okay, now, your audience is not going to agree with me on this, but this is what we do. We're value investors. And what does that mean? If a stock or is undervalued, I want to buy it. If it's overvalued, I either want to sell it, or if it has momentum, I want to hedge it, or I want to protect it.
Right.
Now, there are different drivers. And by the way, gold can be trading as it is now and be overvalued for years, because certainly a few
Monetary Metals is offering 12% on silver, paid in silver in a historic offering, the first silver bond in over 150 years.
There's about $15 trillion worth of precious metals in the world, all sitting there. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's not easy to ship, and it costs money to store in a protected manner. This platform allows gold to be put to productive use, so instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver, paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
years ago, it was trading undervalued for many years. And the same thing is true for silver. For
Right.
many years, it was very undervalued. Now it's actually pretty close to value. So we have four primary parts. It's currently worth about 22.35. And it depends. Sometimes it trades as a commodity, which is about 1880, up to even 1975. As a currency, we rate it as roughly 2280. And by the way, these numbers can change on a daily basis, a
Right.
weekly, a monthly, a yearly basis. As an inflation metal, about 1980, but currently it's been trading as crises. Although very interestingly, today, when it's Tuesday, we're talking, and gold hit resistance at 2,700 as we expected. It's testing down. Gold, silver went down. Oil went down. Actually, a little too early for my taste. So again, we think gold is overvalued.
Right.
I don't think it's going to go this low for a while because we're in a crisis environment. But should the situation in the Ukraine, should the situation in the Middle East go, will probably drop down to 2,200. At the moment, we need to see a test of 2,600 first, as you can see. I don't know if we're going to go much lower, but we could see 2,500. Again, it depends on the global situation. It depends on
Right.
October 22nd.
Right.
However, we are long-term, long precious metals, both as an investment and a portfolio hedge. Trading is a very different story. You can be buying and selling it all the time.
Right.
But we're basically long at this point, and it's been doing very well. Now, what people don't realize is, or a lot of the people I deal with who are US and Canadian investors, there's a big world out there. Now, right now, a lot of people are selling gold. If we go back about 2, 3 years ago, and I'd be in an audience, and you'd see gold down, I'd say, is there anybody in this room selling physical gold? And the answer would be no.
Right.
They were long-term buy and hold. But if you go to places like China and India, let's take India especially, it was an investment. And recently, when it was at 26 and 2,700, people were selling it because and when it comes down lower, they're going to buy it. So there are people selling physical now because gold is a bit expensive. You see that in China. Europe is mixed, whereas the United States is starting to buy more, and that's why Costco, et cetera, is selling out of their gold bars. So there's a global situation. It's a bit expensive, so there is selling going on in the physical as well as the games that are played in the futures market.
Wow, that's super exciting.
Yeah. Now, silver, I know we believe has two primary drivers. One is as an investment. We rate it about $28.
Right.
And so it's a little bit expensive, but hardly so, because we're testing 30 now. But as a commodity, it's only worth about 22. So if investment interest dries up, which we do not foresee, it would go down there or be undervalued. Now, it is true, and people have targets of 40. We don't. We think it's going to get stuck at 34 and 38. We got to 32, but that a lot depends on the global situation, depends who becomes US president, et cetera.
Right.
And
Right.
again, we are long silver. Most of what we did was at 18 and 22, but we're basically long this both as an investment and a portfolio hedge. I personally have great difficulty selling gold or silver unless I'm doing it as a hedge.
Yeah, absolutely. I agree with you there.
Now, there's a very good source of information. I think your readers probably know about it, but it's the Silver Institute. They have lots of information on prices, investment demand, and it's a very good source. You just look, you can keep yourself very busy with it. And if you're not familiar with it, I would recommend going to their website. You'll find a lot of serious information about the real demand of that.
Mm-hmm. Now,
Okay.
when is a good time to invest in gold and silver?
Gee, that's a good question. I wonder what the answer could be. And my answer is now. And that is true, even though gold and silver is overvalued. Now we see what's happening traditionally. If we go back 20 years, people would tell you that if gold is going up and silver is going up, the stocks will outperform.
Right.
But what happened is many companies were very badly run in the old days, say in the say around 2010, 2011, when we were up at $2,000 gold, when we were up at $50 silver.
Why were they badly run?
Because they didn't look at it, run it as a business. They didn't care
Right.
what the cost was. Remember, effectively, a mining company is a manufacturing company. Everything they manufacture can be sold. However, they can't control the price.
Right.
And they didn't care what the cost was. They were just going because they thought it was going to go to $100 or $1,000 or $5,000. So they didn't care about it. And then when things changed after 2011 and it went down, they lost a lot of money.
Mm-hmm.
Today, most of the companies that are well-run, and we're talking about well-run companies, effectively are run as businesses. They're not run as end-of-the-world situations. Now, my advice, I'm sure a number of you people may disagree because they never want to sell gold, they never want to sell silver, but we'll show you why you should at times. What we think is in the range we're in gold, and silver, we're not there yet. Silver has more to run. But in terms of gold, above 2,500, I think 20 to 30%, 40% of what you do, you could be selling the gold you have and buying gold stocks and outperform. Now, everything depends on what you own. If you own gold or you're buying gold now, I'm not suggesting a straight short. I have sleepless nights if I was short gold or silver.
Right.
But if you're looking at a risk reward adjusted basis to make more money with less risks, you should have some silver stocks and some gold stocks. Again, maybe up to 50%, or at least selling and stopping it. We,
What?
for example, sold our silver at $49. In fact, we were shorting it.
Right. What would you say to the people online, Henry, who are very strong willed, like who are just just physical only and no stocks, and when you kind of tell them, "Oh, sell your physical for stocks," they don't take it very well. What would you say to
Well,
those
we
people?
have a slide on that, but it may be more in the next issue. I would say the
Yeah.
following. Everything depends, and we're going to deal with this in detail next time,
Right.
why you're buying something.
Right.
Are you buying it as a trade, short term, positional? Are you buying it as an investment, short term, or as a hedge? And do you already own it? So let's just talk about the people that already own it and have been in it a long time. Well, I'd like to know, what did they do in 2011? We got out early. Silver was 30. We started shorting it at 49. Did very well. But if they held it, it went absolutely nowhere for the next
Right.
12 years. That's
Right.
a
Right.
very poor return.
Right. Yeah,
The-
I understand. That makes sense.
And most investors, as a professional, a lot of investors are very good at buying. In fact, when there's a frenzy, a lot of people get in much better than I do because but they don't sell. Most, I won't use the word amateurs, but non-professionals don't know how to sell. They have no idea. I was trained as a value investor, which means, well, you can use momentum too, is effectively I would buy up to the point of valuation. When it goes overvalued, I then either put stops in, trailing, or when it gets to a certain point, I'm out.
Like you got to take
Because
profit. You got to take a profit eventually,
if you're
right?
taking profit, the question is, what else do you do with your money? I used to do some trading, and people would say, well, let's say stock went from 10 to 25, and I got out at 20.
Right.
And they said, oh, so look at you. You left $5 on the table. But it depends, what did I do with that $20? If I made $10 with it,
Right.
I'm better off
Yeah,
than what you did.
yeah,
So,
absolutely.
so a lot of this depends on what you're buying it for.
Yeah.
So I'm going to give you one pick, and then we'll go one more slide because
Sure.
I want to go into some details. This is our favorite. If you only could have one gold or silver stock, and by the way, I think you should have more.
Hmm.
But if you only had one, this is the one. It's called Mag Silver, and it's our desert island pick. We've been holding it for a while. We bought it at 13, at 10.50, at 9.56, and just this week, we even bought it at 15, which is expensive, as a hedge because it's going to go to 18, although our internal targets are 25 to 40.
Right.
So they're
That's
much
pretty
higher.
good. That's pretty good.
Now, what is a desert island pick? That says, because I trade a lot, what if I had no access to the internet and I was on a desert island and I wouldn't be picked up to New Year's 2025? I have no idea in markets. What would I buy? And this would be one stock I'd be buying. So I think it's very undervalued. Since we have a little time, I can even tell you why. Because not only is it a producer
Right.
at very low cost and increasing, but they have two properties, actually, and three, if you include their home place, that I think are going to have major discoveries. And once there's a discovery, you get a 50 to 100% pop.
Yeah, no,
So
it's crazy, especially with how undervalued, of course, the silver and the gold industry
stocks
is.
are.
Yeah.
Right. And let me mention this. So what happens is the following. What people don't like. So basically, in the old days, it would go up. Now, it hasn't gone up for years. I mean, there are always special situations. There's some gold stocks and silver stocks. They go 50, 100%, 200%. But overall, the quality ones, which are basically only 10%, there's like thousands of gold and silver stocks. They're only about 100 to 200 that are really any good. But what is going to happen, in our view, over the next year, is Western investors going to be buying more stocks, starting with the big boys and then working their way down. And you will get the traditional idea that you'll get an extra 10, 20, 30, 50%. So the question is, are you just going to be holding this forever, never selling, and hoping it's $100 silver and $5,000 gold? And if we're here in 30 years from now, I suspect you'll be right.
Right, exactly.
But the question is, if this is for you, again, it depends on what percentage of your money this is. Is it a hedge or long term? But if you want to do some trading, you can sell. It's like real estate. What happened if you had owned real estate in 2007,
It's
in
not good.
2008? What happens if you own Florida real estate right now? By the way, more than doubled
Yeah.
in the last 3 to 5 years. Right now, unfortunately, it's going down seriously. Now, and again, it's with a real estate, it's different because if you're living in it, obviously it's very different. But if it's an investment and you didn't take your profits, or in Texas too, like in Austin, which some of the very sophisticated people I know sold about a year or two ago, they doubled their money, said thank you, and I can take that same money and put it somewhere else better.
Right.
As for example, not now, but when copper goes down again next year, and it goes down to well below 4, I'll be buying it,
Absolutely.
and
Yeah.
I'll get more money on that than I will for some other things.
Yeah, absolutely. No, you absolutely nailed it. And it's such like all of us at Wall Street Silver are so grateful for you coming down and sharing your views on the silver market and the gold market. And I absolutely, as silver and gold develops, Henry, we'd love to have you back on. I know it's going to get even more exciting in the future, but yeah, thank you again.
Absolutely.
Yeah.
And next week, and for the last time, we'll
Oh,
give you like
yes.
5 to 7 good stock picks, not necessarily all of them for you, that you should look at, and one or more, I believe, belong in your portfolio, and watch it. And again, of course, having physical silver and gold is fine. Naturally, there's nothing wrong with that.
Of course, I
In fact,
agree with you.
actually, that's much too modest. It's a good thing to have. I didn't say there's nothing wrong with it. It's obviously a very good thing to
Yeah,
have.
exactly. Well, again,
Okay.
Henry, such a huge pleasure having you on, and we'll talk to you in the future.
Thank you.
Talk to you soon.